every time we had one of these crashes, before it, the market was trading at record high.
People want to learn from historical perspective. Is there something that they can take for the next big crash?
All the wars that were going on suddenly came to an abrupt halt.
How long it's going to take us to even try to normalize inflation? Hi, Peter.
Hey, what's up?
Welcome to the Money Signal podcast / Peter's life story.
Yes.
And much more. Peter, you have been the longest standing stockbroker on the floor of the New York Stock Exchange, and I probably bet myself that you're probably the longest standing stockbroker anywhere in the world.
Yes.
I keep on wanting to ask you about multiple events that you've been through, and actually the comments that we get on our podcast are mostly around questions for you and how you react during specific time periods and what to do. One of the most prominent conversations of consumers right now are inflation, the war in Iran, and what is happening out in the world and how that's affecting markets. People want to learn from historical perspective. Is there something that they can take for the next big crash, or basically the next big event that might happen? And if so, what is it? So I'd love for you to cover today, in your experience, especially with the last biggest crash that we saw, or one of the most prominent and interesting different type of downward fall,
right,
with COVID and the COVID, how markets reacted to COVID.
Right.
What do you remember about, I mean, I know COVID is a very sensitive topic, but tell me, what do you really remember about COVID starting and what was happening on Wall Street?
Okay, so first an answer to, I mean, that's a lot to unpack, as it were. I think it's important to note that each one of the crashes, crises, pullbacks, sell-offs, consolidations, have had different components that made them very special in their own right. Mm-hmm. And it's important, though, there are definitely threads that we can draw from and carry through from each one of these crashes that to help us for the next one.
Okay.
But I think each one was so specialized, and the components that made them up were so different in each way. Like what caused the crash of '87 and the way the market sort of unfold as that the story unfolded was different by so many different by nature, just because it was 1987 and the market was trading at whatever. In the 80s, the market was trading at 3,000. I just recently, the Dow was at 3,000 in 1980.
Wow.
And I interviewed my friend Tim Anderson the other day about why he felt that the market was, even with the fact that we're in the middle of a war right now as well, like why is it that the market's still trading at record highs? And he said it was basically, and he's a great historian for this story, he said he draws from the year 1980, and he's calling it a peace initiative rally.
Oh.
And so I said, well, what does that mean? He said, well, in 1980, Ronald Reagan was president. We were in the midst of the Cold War, and the Berlin Wall came down.
Yeah.
And that there was a peace initiative globally. All the wars that were going on suddenly came to an abrupt halt. Mm-hmm. Obviously, the Soviet Union was broken down, and there was no longer that situation. And so the Cold War was over, and the whatever wars were happening throughout the Eastern Europe, right, came down with the fall of the Berlin Wall. And so it was when that feeling of peace happened globally, obviously catalyzed by the fall of the Berlin Wall, that for some reason the market just chilled. And it went from 3,000 Dow to 5,000 Dow. Now,
wow,
doesn't seem like a lot in perspective, but we're now at 50,000 Dow, and it's a matter of the percentage rally from 3,000 to 5,000 was massive, probably one of the biggest moves ever, because I mean, from 48 to 50 or 45 to 50 is a 5,000 move, but percentage-wise, it's a lot smaller.
Wow. Mm-hmm.
So he said that's what I'm seeing now. His analysis of why the market's trading at record highs, again, is because people are already foreseeing the forest through the trees. They're seeing this war coming to an end. And they're seeing a denuclearized Iran. And they're seeing that we are getting friendly with China again. And they're seeing a peace initiative globally. Look, that was after all the things that our administration has done. But so sometimes you can draw off of historic data and experience, and sometimes you can't. So crash of 87 was one thing. The rally of 1980 was another thing. The internet bubble was another thing. Obviously, because markets had traded up to this point where, they reached. Now, the only thing that is consistent with every crash, pullback, sell-off, consolidation, whatever you want to call them, because, a crash is a crash. There have only been maybe a handful of crashes in history. A crash is really a massive percentage sell-off in a short period of time. Sell-offs happen over a little longer period of time. Pullbacks are a smaller sell-off, But anyway, the only thing that you can draw from all of them is that before they happened, the market was trading at record highs. So crashes didn't happen when markets were trading down, right? February 19th of last year, when the market sold off 20.8% all around that tariff story that Mr. Trump disseminated, it was a record high in the market. And then it sold off and it crashed. If you go back to the crash of 87, the market was trading at a record high before that happened. If you go back to February 12th of 2020, when COVID happened, and the sell-off from February 12th until March 23rd, right? February 12th was a record high in the market. So it's interesting, it's curious to note, that every time we had one of these crashes, before it, the market was trading at record highs. But the components that made each one different is obviously the bubble of 2000 was an internet bubble. It was, everybody thinking the internet was the biggest thing. Yahoo came out at 3 and went to 400 and back to 3. Obviously it wasn't a bubble in retrospect because the internet has taken over our lives. But at the time, it was a bubble that burst.
Right.
Then you had, obviously COVID was a global health crisis. Very different in all respects. The crash of 08-09 was a predatory lending crash. What does that mean? Well, that means that the market, that people in the market decided that the powers that be, the Goldman Sachs of the world, decided that they were going to sell houses and credit to people who couldn't afford houses or credit. And they came up with this plan. Why was it predatory? Because they had a plan. If you know the way the story unfolded, right? Suddenly you had people being sold houses, being told, don't worry, the market's going up, you'll be able to sell this at a profit. Take this credit card, it'll help you with all these other things. What ended up happening was they did this in the thousands and tens of thousands of homes and credit cards to people who had no right to be getting, not a right, but had no business getting these loans because they would have never been able to afford them.
Right.
And in retrospect, when the whole thing tumbled, right, the powers that be that were selling all this bad debt had made a bet called credit default swamp. They had taken out insurance on this whole thing failing. The thing that they were selling, which was credit and houses, right, to people who couldn't afford it, right? When everything was said and done, it turned out that they had bought. It's like if I buy life insurance on you, and I slowly poison you, right? Because I know you're going to die, and I'm going to benefit from your death. They knew that these houses were going to default because it made no sense to sell tens of thousands of houses to people who couldn't afford it.
Wow.
No way that they could guarantee them that the market was going to go up. You can never guarantee that. And so when it all was said and done, how come they survived this thing beautifully? Well, they had bought insurance on this whole thing that they set up failing.
Oh, wow.
And then they made billions of dollars on it.
I did not know that.
You did not know that.
No.
Well, that's where the bad guys always protect themselves.
Wow.
So that's what I call it, a predatory lending crisis.
Okay.
So what ended up happening was when after a couple of years of people buying thousands of houses globally, the market did not go up and these houses were not worth more, then they suddenly said, oh shit, and they started defaulting on the loans. They started foreclosing on the homes. And so what did all these banks do with all this bad debt? They packaged it in a nice new box and sold it across the ocean for 50 cents on the dollar, right? And those
Crazy.
people will, and there's always somebody who's going to buy something at a 50% discount. So they took the box, they never opened it up. And then suddenly, as the market got worse and worse and worse, and everybody started defaulting, they said, wait a minute, we should probably look what's inside this box. And they realized, oh no, this is really bad. So they repackaged it with a bow and sold it for 25 cents on the dollar. And it kept getting resold and resold down the line to the poor schnook who was going to buy something at a 90% discount. Right?
So crazy.
Because they didn't mind, because they were making money with the failure. So that was why it was predatory. So it's a
Wow.
it's a horrendous story. They've never been called on the table for it, right? That they knew in advance this was going to fail, yet they were still selling these houses to these people
Yeah.
who foreclosed. They lost their debt, they lost their credit rating, they lost everything. The big guys didn't really give a damn because they were protected on both sides.
Is there another story of predatory market situations
Not that
like
I
this?
know of, nothing like that.
Wow.
But this was like the countrywide brokerage is the one that was the first to tumble because they couldn't come when the houses didn't go up and all the houses they had sold foreclosed.
Yeah.
They were sitting there holding a bag of bad debt, right? And they're going like, oh, they weren't the ones who had bought the insurance.
Yeah.
It was Goldman Sachs's brainchild that said, you know what? They probably were sitting there. How can we screw over a whole bunch of people? Well, let's sell them. And this idea of financial freedom and a home and credit cards. And well,
Wow.
how do we protect ourselves if it goes south? Because we kind of know it's going to go south.
Yeah.
We'll buy something called a credit default swap, which is insurance. It's a fail.
Wow.
So it's a horrendous story. And they've never been called on the table for it.
Wow. And how many years did it take from the 2008 crash to get the economy somewhat back to normal?
9 years.
9 years.
So what ended up happening was the Federal Reserve came in. They realized they had to bail out all this situation. And so they had to bail out AIG, largest insurance company in the world. They had to bail out General Motors, the largest car company in the world.
Yeah.
And the Federal Reserve printed $800 billion. Like during COVID,
Yeah.
they printed $3 trillion.
Yep.
This was 10, 20 years earlier. They printed $800 billion to bail out the banks that failed,
Yeah.
to bail out the General Motors and AIGs. Okay?
Wow.
However, it was not enough it was just enough. So $800 billion got printed up and put into the market over 18 months.
Okay.
Right? So it's just like pouring a little bit of gas on the fire. And it took 9 years to get back to even.
Wow.
When COVID happened, they realized the lessons they should learn from the last crash, which was, first of all, this is a health crisis, so it's way more pervasive. There are people dying in the streets. That's a big deal. Is it affecting every nook and cranny of the world? Absolutely. Like the Sherpas walking around in the Himalayas were affected by COVID. The people in Patagonia were affected by everybody. So it was way more pervasive in the nooks and crannies of the world and the economy. And so they said, okay, we got to do something major here, or else the world is going to collapse. So they printed $3 trillion.
Wow.
So that's what, 10 times, 8 times more. And they put it into the market over 3 months, not 18 months. And we were back to even by August.
Wow.
So it took only 6 months to get back to even. So they upped the amount of money that they printed as a stimulus. They shortened the time period of how fast they were going to put this money in the money system, and it worked. So 4 months it took. Now, the great part of, I mean, that's why I'm a fan of Jay Powell, because even with all that happening, 21, think about back to even by August, we were up 20% in 2020,
Right.
even taking into account COVID.
Right.
We were up 21.5% in 21, even through all these odds. 22, we were down double digits because of the 18 consecutive interest rate raises that we had to do to pull money out of the money supply in order to offset
Well,
all the money they printed.
yeah.
And so 1 year was a pullback year, but 23 23, 24, 25 have all been 20+% rallies. So imagine with everything that had happened, they had learned enough of a lesson from 08, 09 to realize we need to print way more money. We need to put it in, pour a lot of more gas really quickly.
Right.
And we will be able to get the world back on track. And they were right. It worked.
And is that also the reason why inflation is now soaring? Like a slow transition to bringing us to the inflation levels?
When you print $3 trillion and put it in the money supply, that is incredibly inflationary. Inflation went from 2% to 8.5%. And then slowly, as they decided to start, and that was happening while we increased interest rates 18 consecutive times, where we got interest rates up to 5.5%. In order to unwind this position, we need to start taking money out of the system to be more disinflationary, right? And so what did they do? They had to pull money out of the money supply, so they started raising interest rates. So realize, before all this, we were paying 0 interest rates. R&D for all the big tech names. We're borrowing money for 0. Money was flying, money was flowing. It was all fine and good. How do you, if all of that is very inflationary, and we throw $3 trillion on top of that, how do we unwind this situation? Is by pulling money out of the system. How do you pull money out of the system? Is you raise interest rates, so these guys are less likely to borrow, right? So what we saw was, we raised interest rates 18 times, a quarter of a point each time. The minute we went up from 0 to 25 basis points, all the people borrowing every day were no longer so easy to borrow. They had to think twice about it. When you borrow for nothing, you'll borrow all day long. But if you suddenly have to pay a big for that borrow, you're going to go, well, maybe I'll do it this time. Maybe I won't do it the next time. Maybe I won't borrow as much, right? And that's what ended up happening.
Did they, I have several questions. Do you think that they expected the effect of all of this money poured in and the inflation levels and how long it's going to take us to even try to normalize inflation? Do you think that was expected?
That was a day by day, week by week, month by month analysis and repositioning by Jay Powell. That's, I believe, is his mastery, is because he was able to raise them in the right way, start cutting them in a right way, adjusted all the other stuff, because it could have gone the wrong way really badly. But we were able to get inflation from 8.5% to 2.5%. For some reason, we had this 2% number in our minds for a long time. We never got there. We got to 2.5%.
Wow. And then taking into account now, because I was reading actually an article today about inflation and Iran.
Right.
How is that all intertwined? What does oil have to do with that?
Okay. So,
good question.
the price of oil,
Yeah.
what is inflationary? When shit becomes more expensive.
Yeah.
Okay. Why does stuff become more expensive? Well, you have oil trading at $65 a barrel. Our economy is fairly healthy at 3.5 to 4% GDP, gross domestic product.
Yeah.
That means we have a healthy economy. You invade Iran. It's not just an invasion, it's an invasion into a neighborhood that has a commodity tied to it that is incredibly potentially inflationary. For every $10 that the price of oil goes up per barrel, it's equivalent to 1% of GDP. So when the war broke out, we were at 65 a barrel. We went up to $119.20 a barrel.
Wow.
That's $50.
Yeah.
That's 5%. So we went from a healthy 3.5 to 4% economy to an economy that is running negative because of the price of oil.
Right.
Why is that? Because our lives are run by oil.
Yeah.
If I go from paying $65 a barrel to paying $120 a barrel, the cost of everything, the gas for the truck to deliver the fertilizer, to deliver the eggs, to deliver everything becomes incredibly expensive. What's up? In 20 minutes? Okay, I'll be there. I'll be there in 10 minutes. Okay. 10 minutes, I gotta go.
That's fine. So
okay.
everything becomes much more expensive, obviously.
Everything, because oil is everything. It affects our homes and our heating.
Right.
It affects the transport of goods and services.
Right.
Globally, in every way, the price of oil is affecting everybody. So everything became the inflationary effects of oil going from 65 and maintaining those levels above 110 a barrel for as long as it's been going on, for 8 weeks, was the most inflationary thing that we've seen in decades.
And how's the market reacting to wars like the one in Iran?
Markets,
Good, bad?
well, wars are funny as far as they relate to markets. There's an old adage on Wall Street that when the bombs start to fall and there's blood in the streets, it's time to buy the market.
Okay.
What markets don't like are uncertainty.
Yeah.
So when Vladimir Putin, a couple of years ago, in November, started talking about attacking Ukraine, for the 2 months of him talking about it, the market went down thousands of points because it was nothing but uncertainty.
Yeah.
The minute he attacked the Ukraine, the market stopped going down and started going up because we knew all the stuff we didn't know before.
Yeah.
So markets are affected by the anticipation of war negatively, but they are also affected by the rally in the market once the war has started.
Okay.
So this one was a little different than all the other wars because of oil being the biggest component of this war.
Got it. And what about Venezuela? Because
So that
there's
wasn't
a
a
threat.
war. That was kind of what Mr. Trump failed to understand was he thought, well, if I have $12 trillion worth of oil that I stole from Venezuela,
that
we'll be okay. Not understanding that the price of oil is set globally. That just because that is now American oil doesn't mean that the price of it is not wherever the global market set it at.
Yeah.
So we don't get cheaper oil than the rest of the world.
Yeah.
It's still that's still at 120 a barrel. So it affected us economically huge. That's why we sold off about 14% since the war started. But then what ended up happening was once the investment community was able to see light at the end of the tunnel, they turned the market around because if you notice in 3 weeks, we got back to even plus some.
Plus some, right.
We went from S&P 7,000 to S&P 6,300 to S&P 7,400 in 3 weeks.
So is it fair to say, and this is obviously not advice, it's just a question, to say that when you're anticipating something is coming, right, could be war or another big event, the markets like pull back a little
Always,
bit,
every
and
time.
it's a good time to consider
Buying,
buying.
100%.
And then historically, you've seen it, that every time the actual event, whatever that is, occurs, then the markets rally with it.
Correct, 100%.
Very
and that's a big
interesting.
deal. So you can always do that. Now, we don't know. There are obviously other components that affect everything.
Right.
But that is the mainstay of war and markets, right? That you can take to the bank, right? And we've seen it, and we saw it with Ukraine. I mean, if you look at the graph from the first time he mentioned Ukraine and Russia started chatting.
Yeah.
I mean, Putin started talking about his attack. If you remember, he talked about it for a couple of months.
Yeah.
And the market sold off aggressively.
Interesting.
And it's a big deal. Now, the bottom line is, are we already back to even in the market? What ended up happening was the market suddenly disengaged the war story. They said, we have no edge on what's going to happen in this war. So let's disengage from it. Let's not let the market trade on every breaking news because we're not getting real news.
Yeah.
Iran said this, we say this, that's not happening, that's happening, it's all BS. So the investment community said, wait a minute, What happened in 2025, that sell-off from February till April,
Yeah.
right, until Independence Day or whatever that was. Suddenly, when Mr. Trump said, okay, nothing to see here, enough's enough, let's buy the market, we were back to even in 4 weeks.
Wow.
And the big investing community spent the rest of the year playing catch-up. They were underinvested in the market all year long. That's what fueled the rally through 2025. I think what happened a few weeks ago was we're not going to get caught by this trauma again. We're going to disengage from the war. It's eventually going to be over.
Yeah.
Right?
Yeah.
A month, 3 months.
Who
That's
knows?
the worst case scenario. So let's just focus on earnings. Let's focus on the market. Let's focus on where there's value, and let's start buying it.
Okay.
And so they bought everything that they could get their hands on, like software. It was trading at 50 cents on the dollar. Scoop, they bought it. Tech was down 12%. Buy it. And then everything else.
Yeah. So last question for you, because I know you have to go. Do you think there's a correlation between the fact that Liberation Day was last year, exactly a year ago? What was it, February or March 2025?
Right. Till
Then we
April
have
19 or something.
Venezuela, we have Iran. Obviously, Ukraine's been going on for a few years.
Yeah.
And now, in the last few months, Dow has hit record highs, S&P has hit record highs. Are all of these, is there a relationship between all of these?
Well, there's a relationship in the fact that when the market understood that they needed to disengage the breaking news story and stop trading one for one with whatever news is coming out about the war,
Yeah.
and focus on like earnings and tech and software and the future, and they realize, wow, I got to buy this market. I
Yeah.
don't want my portfolio or these big portfolios governed by every tweet that comes out of the administration. I want to be long this market, and so yes.
And how long do you think the market is going to keep these record highs? Are we looking higher? Or are we looking lower?
I think we're looking higher. Like anything can dislocate a rally, but this is a significant rally, probably one of the biggest ones. It was the largest. The market went from the most oversold landscape in history to the most overbought landscape in history, the fastest that's ever happened this time,
Wow.
which is huge.
Well, I'm excited to live through the days and have all this financial knowledge thanks to you and investment knowledge.
All right.
Thank you.
My pleasure. We'll talk more later.